Hey traders, this is my trade recap for this past week. Before I jump in, I'd appreciate if you guys would let me know if this adds any value to you for me reviewing my trades each week like this, or does it just make sense for me to do the monthly recap where I show all the trades that I did for the month? Because you're basically getting these through the newsletter, so I don't know if it makes sense for me to recap the same information again on a video. So I just appreciate some comments. Let me know if this is any value add. If not, I'll just do it once a month and then spend more time adding content to teach you guys more about some of the questions you've been asking me. But so let's look at last week. So I put on just one trade last week on 6/29. I sold a put in Chewy at the 43.50 strike, expiring the same week. I got a credit of 45 cents, so that was $450 for me. And I was able to close it out in 2 days for $80 for a total profit of $370. And then for Citigroup, I finally was able to close it after rolling it for several weeks. I was in this trade for 19 days. Again, I'm counting all my rolls as part of this being one trade. So 19 days, I was finally able to close it out. And it was an overall profit of $560 over basically a 4-week period. So let's take a look at Citi real quick. Here's a chart showing every time that I rolled and what strike price I rolled to. So you can see my first initial put that I sold in Citi was at the 55 strike back on 6/5. And then on 6/11, I rolled it down to the 53.50 strike. And then the next week, I was able to roll it down to the 52 strike, and then again to the 50.5 strike. So again, this is what's great about rolling. I was able to stay with the trade, keep moving the strike down as the stock started dropping. And if you look, from the peak, when I first got in this, the stock was around 60 and got all the way down to 50. That's about a 16% drop in the stock. Yet I was able to stick with it. My margin requirement didn't go up significant. I mean, it did go up as the stock kept dropping, but I still had enough buying power to stay with the stock, keep rolling it and waiting for it to recover, to where eventually it did recover and stay above my strike, and I was able to close it out for 5 cents. And if we go look at the trade history, this is why I roll, is because if we look here on the first roll that I did on 6/11, you can see what the price cost me to buy back this option. I do 10 contracts, so that would have cost me $2,160 if I were to close this trade out and just take the loss, minus whatever my initial credit was. My initial credit was 410, so 2,160 minus 410, that would have been my total loss if I would have just decided to stop the trade and not continuing to stick with it and rolling. Okay, well, let's say that I rolled once, but then the week after I decided I wanted to stop. Well, that would have cost me $4,110 to close it out. That's a big loss that I would not want to take. So by rolling, I was able to get the strike price lower to get my strike back below the stock. And of course, by doing so, I received a credit for that. So I had a net credit of 160. And then you can see the next time it would have cost me $2,000 to close. And then the next time it would have cost me $1,800 to close. But I eventually closed this for $50. So that is a good example of the benefits of rolling. Again, rolling isn't a hard and fast rule. I mean, I do roll the majority of my trades. There are situations where I may close it out and take the loss. But I think this is just a great example of why rolling allows you to stick with the trade if you still believe that the company is going to recover, and to eventually get out where you don't have to take a loss. And similarly with Uber, WDC, and GEOS, I'm still rolling these stocks. Uber and WDC are above my strikes now. So I was able to roll Uber down to the 30.5 strike, and I was able to get WDC down to the 42 strike. So now I'm back below the stock. If all goes well, I'll be able to hopefully close these out next week. I got a really nice credit on the WDC roll. I got a 55-cent credit, and I got to roll down to the 42 strike. So that's another $550 I will potentially capture next week if WDC stays above 42. And GEOS, this is one that, I may be sticking with this one a while. The stock is just not moving like I'd expect it to. but that's okay. I was able to get roll it down a strike to the 24.50. To get it down to that strike, though, I had to roll 2 weeks out. Normally, I like to roll just a week at a time. Like with WDC and Uber, I rolled to 710. With GEOS, I had to roll it to 717 to be able to get it down a strike and still get a credit. If I would have kept it at the 25 strike, then I could have rolled it till next week and got a credit. But I wanted to get the strike down, so I had to roll it 2 weeks. So it may be a situation where I'm going to have to keep rolling this in 2-week chunks to keep whittling down the strike price. And the stock is trading around 23 something right now. So hopefully, maybe in another month or so, I'll have it back below the stock price. Or if I get lucky and GEOS goes up a point or two, I can go ahead and close this out. And lastly, here's the trade alert I sent out on Thursday. Basically just going over what we just talked about. It showed the trades that I closed. It showed the trades that I rolled. And then you can see I put on 2 new trades for next week. I got back into Chewy and got a $440 credit for that one. And I also go back into Citi and I got a $490 credit for that one. So for next week, assuming these 2 trades work out, that'll be another $900 week, which is what my total was for this past week. I had a total profit of $930 just from that one Chewy trade and then being able to close out that Citigroup trade that I've been rolling for a while. So that's all I got for this one. If you have any questions, let me know. And I'm working on some other videos that hopefully I'll be able to get out in the next few days. Thanks.